The current APR for staking your Luna is 7.2%. In this video, we're going to discuss an opportunity that you might have to make 2 to 3 times more of a yield on your Luna by selling options on it. But for starters, welcome to Crypto Saver. So unlike all the other videos on my channel, we're going to be speaking about a dApp that is not on Terra. It's actually on Solana. And the name of that dApp? Friktion. So what does Friktion do? Well, you deposit your Luna with them, and from there, they will auction off either puts or calls to institutions. And if institutions buy up those calls or puts, we obviously receive premium for it. And if everything goes A-OK, we pocket that premium, and that premium becomes our yield. Before we dive into Friktion, we're going to cover the basics in terms of what does it take to get your Luna over to Friktion, since it's on a completely different network, right? We have the Terra network, we also have the Solana network. Well, for starters, you have to make sure that you have a Solana wallet. The one that I personally use is called Solflare, and I'll leave a link to them in the description below. Now, once you have a Solana wallet created, the second thing that we have to do, we have to buy up some Sol, the token for Solana. Because basically all the transaction fees on Solana are paid by Sol. Now, how you get Sol is up to you. What I personally did, I simply took some UST from my Terra wallet. I transferred over to a centralized exchange, in my case, KuCoin. Then from there, they have a pair, Sol/UST. I used that pair to swap my UST for Sol. And then I directly withdrew that Sol from KuCoin directly into my Solana wallet. So now that we have the Sol in the wallet, the very next thing we do is we go to portalbridge.com, which is basically Wormhole, and this is where we'll be able to transfer the Luna from Terra over to Solana. Now, I have about 5 Luna that I will be doing live with. I do already have some Luna with Friktion, but for the sake of this video, we'll do 5 more Luna through the Wormhole. So for the source, let's select Terra. For the target, that is going to be Solana. I do have my wallets connected already, so you can see this is my Terra wallet here. And then I'm going to select this for what we're transferring. I'm going to enter 5. I'm going to hit on next. Solana, I already have my wallet connected to also 5ZR are the last 3 characters here, and 5ZR is that is correct. Now, here's the thing, right? If you opt to have them use our Terra wallet to pay for the Solana transactions, for this transaction to go through the Wormhole, you end up paying about $2 worth of fees. I believe you'd pay much less if you actually pay if you own Solana in that wallet. So that's also another reason as to why you want to have Sol from the very beginning. And manual payment, let's click on next. For Terra, we will pay the fees in UST. We'll just enter that. And that's it. I think we're ready to hit on transfer. So it shows right here, Luna from Terra, Luna to Solana. It's going to be obviously a wrapped version of Luna, and that's perfectly fine for us. And now let's click on confirm. And first, we're going to have to OK this transaction from the Terra side, and then we will have to OK this transaction on the Solana side. Okay, perfect. So everything seemed to go through. Now it's time for us to redeem it. So once we redeem it, that is when we're going to have to sign on the Solana side. So let's click on redeem. And yes, the first time I did this, there was quite a few transactions that you had to sign. So we'll approve this one. And this might go on for a little bit, right? So there'll be a few more pop-ups that are going to appear. Notice the fee here, right? So Solana's trading at around, Sol's trading around $100 right now. And the fees are just, they're less than a penny right now as this is being sent through. Which is why you really do not have to have that much Sol transferred over to your Solana wallet if you plan on doing this with Friktion as well. Okay, perfect. So we sign all the transactions, everything is successful. The tokens will become available once the transaction confirms. Okay, so that is it. So if we, so I do have the browser extension for Solflare, but there's a way to kind of expand it out. So it's almost like a full window here. And it's already here. We can see the 5 Luna here. Okay, perfect. Alrighty. Now it's time for us to head over to Friktion and to explain how the platform actually looks like. So when you head over to app friktion.fi, you're gonna land on this page here, and you might get a little bit overwhelmed because there's a lot of options here. And the very first few things you should notice here is that there's the different underlyings that you could run the strategy with, right? Friktion is all about selling options on your cryptocurrency, right? So if you want to, you could sell them on Sol, on BTC, on Luna, on AVAX. And there's on ETH, there's the whole bunch of options here, and I'm sure they'll keep adding to it. And there's also different vaults. So this is Vault 1. This is where you sell calls. And there's Vault 2, and this is where you sell puts. And they just recently released a Vault 3, and it's only for Bitcoin for the most part, and USDC. We're not going to be covering that. We're going to be focusing on Vault 1 and Vault 2. Now, the page that I want you to become comfortable with is going to be the analytical page, because that's where we really get all the information that we want to be looking at. And from the left-hand side, let's click on Luna. Okay, so we're on the Luna page. We're going to scroll below, and I want to explain some of these things you're going to be looking at here. Number one thing to look at is Luna price and Vault token price. Notice there's a difference right here. The Vault token price is 97.88, and the Luna price is 93.24. Why is there a discrepancy? Well, there's a discrepancy, which is represented right here on the first chart. And it's the fact that FC Luna is trading at a higher ratio to Luna. When yield is being collected, it's being shown on this chart actually. So we're going to be jumping around just a little bit from time to time to try to really wrap around things. But notice how for this week here, there's going to be a 0.79% premium that's going to be collected. If that premium is collected, it would be shown on this chart, because then the ratio that FC Luna trades to Luna would go up. Right now, it's at a 1.05 ratio. If it collects more yield, let's say, it would be at a 0.05, well, 0.06 ratio, 0.07 ratio, right? So as the weeks go by, and these options are sold on a weekly basis, so as the weeks go by, this ratio will continue to improve. So when you end up depositing your Luna, which is options right here, you end up swapping them for basically this FC Luna tokens, which represent this price. And as long as you're successful, as long as these options that are being sold expire worthless, and we're going to cover that, don't worry. When you swap back, you will get more Luna than you initially deposited, because that ratio has improved. And it has improved because you're collecting yield from selling those options. They refer to these periods of when they sell options as epochs. Okay? Every epoch is 1 week long. Okay? So think of them as weekly options. If you've ever traded options on the equities market, these are weekly options. They usually go from Thursday to Thursday. They're referred to as European options simply because you cannot exercise these options during their life. They're only exercised come expiration time. So 7 days long. And right now, so if you had Luna deposited into this specific vault, which I do have, the strike price, the call options that were sold, and my Luna is being used as collateral, is $114, okay? So if I'm in this vault and I have Luna deposited here, I would not want to see Luna go above 114 come basically the end of next Thursday. If that happens, I collect the yield. The yield, which is shown to us over here, is 0.79%. Now, that yield is pre-fees, and the fees are 10%, and it's collected from every single epoch. In this case, I believe after fees, the return would be around 0.71% would be your actual return after fees. And again, if this week is successful, we would see the ratio of FC Luna improve, and this would obviously also create a bigger gap between the Luna price and the Vault token price. So again, ultimately, if I want to withdraw my Luna out of this whole project, I would have that 0.71% more Luna than I did before. Now let's go a bit further down below, and you're going to see a lot of yield data here as to like how much you can make. There's really only two things I want you to pay attention to, because this includes the fees and this includes the negative performing weeks. One is yield since inception, the other one is since inception annualized. So what we see here is that this vault has earned 5.26%, and this is after calculating, obviously, the losing weeks and also the fees that were collected along the process. The yield is 5.26%. If we annualize this yield, it's at 17.06%. I mean, that's not too bad. These are all the epochs that occurred since inception of the strategy, and the very first one, I believe, ended on the 7th, so I think it probably began on the 1st. And most of the weeks are in the green. Notice that there are 2 weeks here, back to back, as a matter of fact, that were losses, and the losses tend to kind of be greater than the winning weeks, as you could see here. But this really created a down draw on the strategy for a little bit of time. And we can see this on the chart here, right? Boom and boom. It really came down. If it wasn't for these two losing weeks, I mean, the ratio would be considerably higher because look at this. We haven't yet been able to actually overcome the high that we had here, which I'm just trying to get to it, and it seems I can't mouse over. There you go, February 24. So we still haven't been able to overcome that high from February 24 because of those two massive losses that kind of came back to back. Back at the end of February, we were already at a 5.36% gain. Okay, and again, remember, if you withdraw out of this vault, you would end up just simply having more Luna than you initially put in. So it's similar to you staking it, because if staking it, you typically want to make sure that you're compounding your Luna and you have more Luna and so forth. Well, here, if things work out and you're collecting premium and you withdraw at some point in the future, you're going to have more Luna than you started out with. On the bottom chart here, this is a way for us to kind of look at the price and look at where the strike prices are. The dotted lines up above are the strike prices here. And if we look right here in the middle of the chart here, we can actually kind of get an idea as to when the price did break through the strike price. And when it did, that's when the losses occurred. Now, these are cash settled options, meaning when you take this 3.42% loss, the value of the Volt token basically drops by that amount, okay? So yes, there's a situation in place that if you get something crazy, such as Luna rallies way above the strike price, and you lock in a 10% loss, well, the Volt token price will drop by 10%, which would affect the ratio, right? It would affect the ratio. And this is important because if you got in at this ratio of 0.05, and the very next week there was a humongous rally, let's say, in Luna, and it blew past the strike price, the ratio maybe drops to 1, let's say. When you look to convert, you're going to see that you now have less Luna than you began with, okay? These are cash settled options. So this is not a risk-free strategy, okay? Some literature on Friktion tries to show you how this is a very simple residual way to create yield on your Luna. It's pretty simple, that's for sure, but it comes with risk. It comes with risk in the fact that you could lose a decent portion of your Luna if Luna really rallies to the moon. Now, when you initially deposit, you obviously cannot join an epoch in the middle, okay? If I were to deposit, so the current epoch has already begun. If I were to deposit, well, first, I want us to kind of look at a few things here. I currently have 10 Luna deposited. Notice as your estimated yield is 0.071 Luna. Okay, that is considering the fact that I would be successful in this epoch, and to be successful means that that option expires completely worthless, meaning that Luna had never reached that price. And touching on this strike price again, notice the break-even price is slightly higher. And the reason why it's slightly higher is because no matter what, even if the price of Luna goes above the strike price, we collect our yield no matter what, okay? That yield will always go into our pocket, so we can take the return of the option that we sold and we could add it to the strike price to get the break-even price, and that is 114.90. And what does that actually tell us? Well, if Luna somehow ended up at 114.90, the very minute that these options expired, it would mean that the Volt token actually did not really gain any extra ratio over Luna. Like this graph up here would be perfectly horizontal, okay? We didn't gain anything. That's our actual break even. Anything below that, we're making money, right? Preferably below 114 means we pocket that point. What was that 0.79%, right? Pre-fees, obviously. So when we click on deposit again, this comes up here. Yes, that 0.071 Luna represents post fees, how much we would receive after the current epoch. And if you look below, there is a capacity here, right? That basically Friktion can only take on 180,000 Luna, but only 61,000 of it is being taken at the moment. The Volt tokens, this basically gives us the fractional value of it. Well, specifically the ratio value of it, and auto compounding. So this would tell you that, okay, this current epoch ends in about 6 days and 3 hours. And as long as your Luna is in this vault, you'll take part in every single weekly option selling opportunity, so that we have the fees down there. Now, if you do deposit it in the middle of an epoch, you will not take part in this current week, okay? You're gonna have to wait for the next epoch to begin. Now, we'll do this actually, not just yet. I just want to show you guys something else first. If we go to the withdraw screen, same thing here. If we enter that we want to withdraw our Luna, it's not going to come back to us right away, okay? That's not going to happen. Because again, we're in the middle of an epoch, okay? So if you do put it through when this current epoch ends, which we could see it right here, about 6 days and 3 hours, then we'll get our Luna back. That's how you would withdraw out of the vault. If we take all that away, notice I have this option here, Mint FC Luna shares. Now, when you do deposit Luna and you're finally in an epoch, when you go to your wallet, your Solana wallet, you're not going to see any tokens. Like even right now, I have 0 FC Luna tokens. You will have to mint them. Now, it's not really it doesn't really change anything whether you mint them or not, but if you just want to have something as a receipt almost in your wallet, and also I believe that on Ape board, Friktion is part of that, and if you have FC Luna tokens, they are going to be shown there. So let's mint these shares. We're going to okay everything through here. Once it loads, we are going to approve it, and we should now have these FC Luna tokens in our wallet. Let's refresh the page here. Yep, there we go. Right, so now I have the 9.51 FC Luna tokens. And we know that, okay, so it's minted. Okay, perfect. So we'll click out of this. We know that every FC Luna token is worth $97.92. Okay, that's the value of it. And now again, if we're successful and we're collecting this yield, then the Vault token will go up in value, okay? Specifically go up in value against the Luna. Let's go back to the deposit page, and we're going to do this. We're going to deposit 5 Luna. This is the 5 Luna that we transferred over from my Terra wallet. We're going to look to deposit it, and let's click on deposit 5 Luna. We're going to okay this through. This is what you would do if you're interested in it. We're going to approve the transaction. And this will go through. And again, I do not expect, I do not expect, this Luna is not going to be involved in this current epoch, right? So on Friday, okay, so the Luna is deposited, perfect. Okay, and that's it. That's all we have to do. Okay, so from this point on, every single week, Friktion will be selling options for us, specifically call options. Now, yes, here's a big key thing. Friktion is responsible for deciding the strike price of the options that are being sold. We have no control over that. They do say that they auction off the options to the highest bidder. That's what they say that they do. Specifically, they say that they sell these options on a website known as Terra, and this is where they auction things off. I think the auction lasts for a few hours, and you know they say that they have their own kind of methodology and so forth in terms of getting the best price for these options. I mean, ultimately, they do want to make sure that their users, the ones that are depositing Luna or any other token, that they are going to have a positive yield, right? So they want to make sure they get a fair price for it. You want to make sure that we get a fair price for it, more importantly, right? That we're being paid an adequate rate for the risk that we are taking, because we are taking risk. Again, this is not a risk-free strategy. If these strike prices get blown through, we lose the difference, okay? We lose the difference. Now, let's briefly look at Vault 2. If you're not so interested in selling calls because you're like, you know what, I'm a perma bull for Luna and I think it could even double over the course of 1 week, I'm not comfortable selling call options, you could opt for Vault 2 where they sell put options, okay? That is also very much an option here. And if you look at the performance for selling puts here, again, we want to look at yield since inception and since inception annualized. It's at 3.69%. It's actually lower than selling calls. And the reason for that is just very recently, you can see right here, there was a loss. There was a loss, and it's right here at 3.17%. Now, it's funny that every time we see a loss, it's between 2 to 3%, which is not that bad, I guess. It's not like drastically going to destroy you. Granted, that we did see on the call side that there was almost 2 weeks back-to-back where you lost 2% and 3%. That hurts a lot. Because that actually means you lose 5% of your Luna, by the way, okay? So if you got in those moments, okay, if you were the poor sap who got into Friktion right then and there, within 2 weeks, you lost 5% of your Luna. Probably a little bit less because obviously you collected the premium and so forth, but about 5%. In this case, this 1 week was 1 week of a 3% loss was enough to really, hurt the price of FP Luna here. So it's really up to you what you're more comfortable with. Right now, we're in the current epoch, we can see that the 77 puts have been sold. Okay, and your break even is at 76.59. Now we're gonna head back to the first vault here to Luna, and I just want to have an overall conversation about this strategy. I'm going to say this first. This is not a strategy where you should take all your Luna that you have within Terra and deposit that into this. No, do not do that, okay? Because there is risk here. Unlike just staking your Luna where you know you earn that yield, you never really risk losing your Luna. With Friktion, you risk losing your Luna. You might deposit 100 Luna and God forbid, there's a few bad weeks. All of a sudden, you might only have 90 Luna, okay? That can happen. Does it make sense to put a little bit of it in it? Sure, it does. Now, where my concerns kind of run of this is who the buyers of these options are, because naturally there has to be a counterparty to it. Now, even just briefly looking at Terra, for example, or even just looking at some of the documentation that Friktion shares of us, it's kind of clear that the buyers of these options are institutions and hedge funds, okay? They're the ones purchasing this. And these options are sold at an auction. So here's what I have in mind. I feel that obviously these institutions or these hedge funds, they have a model in front of them. They're like, you know what, under these current market environments, as long as we do not pay more than X price for this strike price, then over enough instances, we will come out ahead, right? In other words, I'm not necessarily sure that Friktion has an actual edge. We can look at this for 6 months, for 8 months, and be like, wow, we're profitable over the course of the last 6 months, 8 months, but that doesn't mean that it's going to pan out over 2 years, let's say, okay? It's kind of like a casino, right? A casino could definitely lose money in the short term, but if you play enough at that table, they will come out ahead, right? Probability says they will come out ahead. There's an edge built in. Same thing here. I'm not sure that these options would be purchased by institutions without them looking at them, running some mathematical models and being like, yes, it does make sense to pay X price for this strike price, okay? So that is where I kind of get weary over the future of Friktion as to whether or not, you can kind of like feel comfortable in the sense that there's actually alpha here, if you want to put it that way. Now, in terms of maybe mitigating possible losing weeks, similar to the stock market, the model for pricing these options, a lot of it comes, well, a big factor is the volatility, right? It's also referred to as implied volatility. So expected volatility of the option over the course of the next week. Now, very often, implied volatility tends to look backward. So we look at what just happened in the previous week and we try to guess as to how the volatility would look like in the coming week. So if we saw Luna really moving up and down in price in the past week, let's say fluctuated by 25%, we would expect that the next week could also be volatile. It makes sense, right? On the flip side, if the last week, 2 weeks, 3 weeks, very little volatility, things have been consolidating, then there's an expectation that for the next week, there will also be very little volatility. This will affect not only the strike prices that are chosen, but the price being paid for those strike prices. We can see that in some weeks, you get a premium of 1.34%, 1.30%. Sometimes you get much lower, 0.48%, and even a 0.24%. And I wouldn't be surprised that in some of these weeks, strike prices are considerably closer to the spot price of Luna the moment those options were auctioned off versus other weeks, on top of the premium that is being collected. When it comes to these Luna calls, the 2 weeks that were unsuccessful, it basically both happened after a consolidation period. We look at the chart here, we had a consolidation period for a few weeks. It broke through, and it broke through again. Now, in the stock market, we know that most stocks or even cryptos, they go through these periods of times with this high volatility and then periods of consolidation. Rinse and repeat, right? Happens over and over again. We never know how long a period of consolidation can go on for. It can go for weeks, months, maybe even years. So it's hard to guess. But the longer it goes on for, the lower the implied volatility would be, which means there's less premium to collect. And it also means that likely the strike prices are even closer to the spot price, increasing our risk for loss. So I do feel that it makes more sense to kind of feel comfortable with your position within Friktion during a higher volatile period of time, simply because there's also higher volatility being priced into the options, which not only allows for the premiums to be juicier, but the strike price to be further away from the spot price. So what I would say is when you're involved here and you look and you see that, it's been a few weeks, maybe a month, and Luna's been trading sideways, and you see these strike prices really coming in close to the spot price, it might make sense to withdraw at some point. To withdraw and wait to re-enter once there's a breakout. Now it could break out to the downside, right? There's no guarantee it breaks out to the upside. But that's a way to possibly mitigate losing weeks. It at least would have helped in this case. And it does make sense in general. Because even when it comes to the stock market, they kind of say that when there's high volatility in the market, you want to be a seller of options. And when there's low volatility in the market, you kind of want to be a buyer of options. Again, because volatility tends to be backwards looking. Implied volatility tends to be backwards looking, unless there's a catalyst up ahead, right? Earnings is an example of when the market actually will price in. It won't look backwards for volatility. It'll actually also look forwards and be like, wow, there's a catalyst coming forward. We expect X% move. Let's adjust volatility, implied volatility by that amount. From what I can tell, they're not really using events for pricing and volatility within these options. They're just kind of looking backwards. But that's my overview on Friktion. Hopefully this video kind of gave you a good understanding of how it works and how you can get involved. I have, as we've seen, I have a total of now 15 Luna deposited. That 5 Luna is not going to be included until the very next epoch, which should be this coming Friday. I'll be interested to track this. Okay, so again, let me know if you do want me to have follow-up videos on Friktion. If you enjoyed this content, throw me a thumbs up. If you want Terra-related content for the most part, you can also subscribe. But other than that, thank you so much for watching and have a great day.